Thank you, Mr. Chairman. And before I dig into my opening comments, I want to address the elephant in the room. If Chairman Gensler is going to take action, enforcement action, Congress needs to hear from him very soon. The Chairman had lots of time to do the rounds on the morning talk shows. If he has time for that, he should be here testifying with us this morning. And I hope that we see him here very soon. Thank you, Chairman Brown. The free market economy was formed by financial innovation. It's the engine that continues to drive our economy today. But every engine needs fuel, and in order to advance as a country, we must continue to grow and innovate, but we must do so in a safe and sound manner. Innovation can increase access to traditional financial services and may foster new emergent technologies that promote financial independence, access to credit, and capital formation. We all know and understand how technology can improve our daily lives, from using our iPhones or our phones to open bank accounts to opening a digital marketplace. If we foreclose financial innovation, we limit future generations from growth and opportunity. That said, financial innovation must be done so in a safe and sound manner, which unfortunately has not been the case with a number of actors in the digital asset space. For example, for some time, FTX was considered the darling of the crypto industry. Unfortunately, instead of protecting customers' interest and using customer funds in the manner intended, Sam Bankman-Fried, FTX's owner, stole millions of dollars of customers' funds and used them to finance risky bets and to pay for luxury penthouses in the Bahamas. When I consider this massive failure, I wonder whether our regulators, when they were supposedly already had the authority, were they using those authorities? In recent statements, the regulators, the SEC specifically, have noted that it is the responsibility of crypto firms to comply with existing regulations, but it is also the responsibility of regulators to enforce existing regulations and to conduct appropriate, effective supervision. The American people deserve to know why no action was taken prior to FTX's collapse and how millions of dollars of Americans' hard-earned money just vanished into nothing. And it was not just FTX. If the SEC had provided even the slightest bit of guidance, I wonder if we would have been able to protect investors from the collapse of Terra and Luna in May, Celsius in June, Voyager in July, and BlockFi in November. Our aim should be to provide rules of the road that are clear, consistent, and most importantly, foster an environment that rewards opportunity while ensuring consumers are informed and protected against fraud and deception. As we speak here, several countries across the globe are creating their own framework to address the rise of cryptocurrency. Unfortunately, our regulators have muddied the waters. We have been told everything from we need legislation to more recently that regulators have the tools they need to supervise this industry. That is quite a flip-flop. Once again, it is really important that we have Chair Gensler here before September. It is far too far in the future for us to wait that long before we hear from Chairman Gensler. The regulators have permitted activity in this space without providing clear rules of the road, which has unfortunately led to the multiple failures that brings us here today. Let's be clear. Had the SEC provided anything besides hostility to the crypto industry, we may have been able to save investors from losing billions of dollars on FTX, Celsius, BlockFi, and the list goes on. So my question, Professor Jing, what should Congress keep in mind when it considers developing an approach to the crypto industry? How do we strike a balance between appropriate and thoughtful regulation and the tool of innovation that it could be?
Thank you, Senator, for that very important question. We are at a pivotal moment in history where the decisions that you all make as policymakers will affect how our economy grows in the future. And currently, we are becoming a data-driven digital economy. What does that mean? That means that our activities are increasingly based upon data and on blockchain technologies. So the kind of guardrails that you put in place now will affect generations to come. Many of the issues that you need to think about will include certainly consumer protection, but also consumer rights and consumer empowerment. Currently, there are countries around the world who are also looking at how to take advantage of crypto technologies, China being a good example. But in that situation, it's the government that wants to actually control the personal data. Here is an opportunity for you all to create the framework for consumer empowerment, for consumer data rights that serves as a foundation for a digital economy.